Check, please.
Hey, welcome back to Everything Money. In this video, you will learn about our infamous 8-pillar process when looking at a stock. I asked Paul the steps that he takes when analyzing a company a couple years ago, and it really took the whole channel by storm. I think a lot of you were drawn to this process, and we're just going to re-explain it for our 300 or 400 new subscribers we get every single day. So, hey, welcome back to Everything Money. It's been a long time since we started this show. Paul and I in a room many years ago. And Paul, that one time I asked you and we discussed what you do to analyze the stock. We came up with the 8 pillars, and it's all been uphill or downhill since then, Paul. I don't know which way we're going, but so Paul, describe, I guess, give us a recap for our new subscribers and new viewers who are seeing us all over the world. I'm trying to recap, like, what did you do to come up with this system? Who did you model it after, and how did we inevitably come up with 8 pillars, and how does it help people?
So it's a good question you asked, Seth, because I think it was just based on the way I looked at business in general. It wasn't like I was, because I remember the original. If you remember the original 8 things I looked at, I didn't really involve any long-term debt. And the reason being was I always assumed whenever I looked at companies that I was looking to buy or real estate I was looking to buy, I never cared about their debt because I was like, oh, I'm going to get rid of the debt anyhow. It doesn't affect me. And then if you look at the original version, but the current assets and current liabilities did matter, because when you buy a company or you buy a piece of you're an LLC, you're buying their short-term liabilities as well. They're payable. So that might have been why I looked at it that way. I also wanted to make sure that for the current assets and current liabilities that they could do they have enough cash to at least pay their short-term, debts? Because if they couldn't do that, it was almost like a non-starter for me. So, it just made sense to me. Like, well, what do I want to? I want to find companies that are growing in revenue over 5 years. Their net income's going up. Their earnings multiple is reasonable. Their cash flow multiple is reasonable. They're buying back shares, or the shares are staying the same. And it was, if you remember, you asked me the question, Paul, we were on the phone, and you said, Paul, what do you look at when you look at a stock? And I just started rattling them off, and it was 8 things. And I just did it so quickly. Like, if you record me looking at the 8 pillars, it takes me about 20 seconds.
20 seconds. Yeah, 20 seconds.
Yeah, yeah. I'm not saying it to be cocky. I mean, I was so used to it that I just kept doing it. And it's like, literally, I'd be like, okay, income statement, balance sheet, cash flow statement. I get an idea. Like, I didn't know the exact, what was the multiple, but I could guess. I go to the 5-year earnings and go, it looks like it's around this. So the market cap's this. Okay, so it's roughly 20 times earnings. Like, my goal wasn't to be finite and exact. My goal was to get a general idea and say, oh, okay, well, in 20 seconds, I'm looking further. Or 20 seconds later, nope, move on, next stock. You know what I mean? And that's what was the always interesting thing about this process. Is we do it in a video and we explain each step because we have new viewers on every single video. And we want to make sure they understand our steps going along. But we didn't sit there, and we don't do it in the speed of which I did it for myself, because I just flew right through them to get a general idea. Does that make sense, Seth? Do
your investing structure of looking at stocks change as you became a business owner? Because I use our 8 pillars when I now look at potentially helping my current businesses, or we've been talking about how I might be buying into a new business with another partner. And so how does it all play into each other?
Yeah, and not only that, though, it also affects how I look at my own business. Like, when my brother and I go over our financials of our companies, one of our goals is, apart from the real estate part of the business, we want to have 0 long-term liabilities in all of our companies. And the reason for that is that's a Warren Buffett philosophy that I learned that I actually liked a lot. He said, listen, a well-run business doesn't need debt to make a lot of money. And I was like, oh. And that's something I heard him say. I probably read that he probably said it decades and decades ago, but I only read it in the last 12, 13 years. I remember thinking, because I still am a believer in debt, reasonable amounts of debt. But I thought to myself, as time has gone on and my view of money has changed, I thought to myself, well, is my life going to be better if my businesses make me 40% returns instead of 35% returns, but I use the debt to get the extra 5%? No. So let's just focus on the 35% and have 0 debt. And I'll be honest. I love being able to say, yeah, none of my operating businesses have debt, because so many businesses need credit lines and all these things in order to operate, and we don't. And my comment is, if we need a credit line to operate, if we need debt to operate, that probably says something more about our management structure, our way of managing a business, than it does about the business itself. So I want to, it is affected by how I view my current business and how I view business in general, and stocks are all affected. It's all this, everything going together with the way you look at balance sheets, the way you look cash flow. Ironically, by the way, you want to hear the ironic part, Seth?
Go on.
I never look at a cash flow statement in our business anymore, because with no debt, basically the cash flow is what the net income is at the end of the year.
Ah, they're the same.
Essentially, because I shouldn't say that. Yes and no. It's the way I handle my P&L. I put all my capital expenses in the P&L in a way that I don't need to look at my cash flow statement ever. I know exactly what my CapEx is at the end of the year, and I don't have my accountants put any depreciation in. So there's no adjusting entries I'm doing at the end of the year. I let them do that on their side. My books are done the way I want them done.
Mo, when did these pillars start speaking to you in your life? I mean, it's taken me a long time to rationalize, because when we first started doing videos, of course I was doing videos with Paul, but the numbers, he's so fast and he's flying around. It took me a long time to actually still comprehend them. And I'm almost there, Paul, as you know. But Mo, when did it start speaking to you?
So it's funny. If you would have given me a income statement, balance sheet, cash flow statement, probably 3 or 4 years ago, I probably would have had no clue what I was looking at other than just a bunch of numbers. But I was lucky enough I remember one day I was sitting in my office and Paul came in and he was like, "Hey, do you have any interest in doing value investing with me?" And I was like, "Yeah, that sounds good. I have a lot of capital and I don't really want to trade at all." So, and then I got on the train of working with Gary Mashuris, our friend and our mentor. And so I kind of I took a deep dive into this stuff. So I think compared to you, Seth, instead of you seeing Paul doing it on a daily basis and just running through it over and over, I actually took like a deep dive into these financial statements. Plus I had Paul there to discuss it with me. Plus I had to answer all these questions on top of it. So, but it wasn't until about 3 or 4 years ago. And that, I think it was a blessing in disguise. It sucked at the time reading security analysis, but it was a blessing in disguise because it opened my eyes pretty quickly and I was able to understand it pretty quickly because the dive was so deep.
If you're new to the channel, Paul's going to show you what our software and what the 8 pillars look like right now. Go ahead, Paul.
All right, so this is our software, our exclusive software. We have so many things we're working on here. All these things are coming soon. You'll hear it soon. If you want to sign up, you'll get all of these things as part of your membership for no extra charge. So this is what we do. We go to the 8 pillars, and let's just pick up a company like Microsoft. I always use Microsoft as my example because I just love it. So it tells you the market cap. It tells you a lot of very interesting data right here. All the major things like pillars, like the five-year PE. You know, right here we have annual reports. If you click on the annual reports, it takes you to the SEC website directly to their page for their 10Ks and their Q reports and all that stuff. So you have the income statement here. You have the balance sheet, cash flow statement. And then guys, just like me, here's the 8 pillars. This is how fast I did the 8 pillars basically in my head. So we created this page specifically so you don't have to sit there and waste your time like, oh, what's the calculation here? So we do all of this, and it has a 5-year PE under 22.5. Return on invested capital over 5 years greater than 9%. And guys, one of the interesting things about this one is there are so many ways to calculate real return on invested capital. So many ways. I picked mine based on cash flow and the certain debt and equity in the business. Revenue growth, very simple. Is there revenue growth the last 5 years? Net income growth, exact same thing. Now, shares outstanding. Are there shares going down or up? That's simple. Long-term debt. I always use the example. Companies are just like us personally. The more debt you have, the more likely you are to have financial trouble when times get tough. So we look for companies with reasonable amounts of debt. In this situation, this 2.42 multiple means if Microsoft made the exact same free cash flow in the next 5 years as it did in the last 5 years, in half that time, they could pay off all their long-term liabilities. So they could be debt-free in 2.4 years. Free cash flow growth, and then finally, the multiple of free cash flow over the last 5 years. So these things right here, they're great. But most importantly, the stock analyzer tool here, this has been, I mean, Seth, wouldn't you say this is the most popular tool we have on the website?
You know, it's funny is when you used to do this as an Excel doc, it got very confusing. But
Did it?
to me, you know, when you open up Excel docs and, you know, discounted free cash flows, my mind starts, I think normal people's minds get a little confused by math in general. But this analyzer tool, you're right. It's been one of the best things we've come up with. You've come up with. It's great. Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
Yeah, I show just friends and family. I show them just the retirement calculator about how to calculate how much money you will need and how much money you'll need to survive past retirement. And that alone can just simple decisions can make you millions later, Paul. So if you guys want to trade, if this speaks to you, go to everythingmoney.com and join us. If you'd like to trade, you can trade with Mo. Watch all of our 1,200 videos, and you can see what we're doing here at Everything Money. So that's our take. 8 pillars explained. We'll keep you updated, and stay calm. Keep 8-pillaring on. When the waters get choppy, you're going to need to look toward those 8 pillars to stay calm, Paul. So that's our take, guys. Final thumbs up. See you next video.